This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil with Invest Like a Pro. I wanted to step back today and talk about something a little bit different. Has a little bit more to do with psychology today. I'm going to reference a few charts. We're going to look at a few things, but really, this is not something that I have spent enough time on this channel, because I do think it's incredibly important. Whether you're a short-term trader or a longer-term trader, there are really two fears that you have to get over. If you're struggling in any way, shape, or form in terms of your investments, I'm willing to bet it's one of these two fears that I'm going to describe today that's probably holding you back. And it took me, a long time to get through it. I got some help from someone and getting through the first one. And the second one it takes a little time. So I'd like to get into the first fear and just start with how I see the average person struggling. I talk to a lot of individual investors since I do coaching and mentoring. Please feel free to reach out to me if you're interested in that. But I have heard enough over the years, and I know what I went through. This dates back about 20 years. So this FOLM stands for fear of losing money. And I think the average person doesn't really think about this when they're investing, and when they're trading, they probably it comes to them a little bit more often, and they might not recognize this is really what is the problem. About more than 20 years ago, I had the good fortune of meeting with someone who is a phenomenal trader, and we got to spend about a week together. And when I was picking him up from the airport, and we were driving, I was working on a specific strategy off the hourly chart, and I was really struggling with it. And what was happening was I was seeing the patterns perfectly, and they were working out in a really ultimately they were working out, but I kept on stopping myself out prematurely. And not really giving them a chance to, basically not seeing the trade through. And what he said to me, and this was within 15 minutes of meeting a guy who's going to spend a whole week with me trying to help my trading, but really in the first 15 minutes, he had kind of figured it out. And what he said was that you are walking through the valley of fear right now, and you need to get through the other side. And it didn't really click with me right away, but over the year or two after I had met with him, it dawned on me that was really the core thing that he taught me, that I think, if you can apply this to your trading, is going to take you to a whole nother level. So let's say you've done all the work, and you've got a stock that has all the criteria. You've done all, and for me, it would be, a stock that's showing a really strong move to the upside and has pulled back. And on the upside move, I had really strong momentum characteristics. And on the pullback, really, really light volume, low momentum. ADX was showing all the proper criteria on the rally up, and then on the pullback. I got my opposing trend trigger on the lower time frame, and then I get an entry. And so I've kind of put this red line in, and I say, okay, this is really where I got in. And I put my stop in underneath, and my plan is if I get up near this prior high, I'm going to take a piece off, maybe take half off, something like that. Or I might just take the whole thing. It might just be a short-term trade, and I'm going to do that. But what was invariably happening to me, and what I see happening to a lot of traders right now that I'm talking to, is that they'll put the trade on, they'll have this plan in place, and then what'll happen is the market or the stock will move against them, and now all of a sudden the price of the stock is below the entry point. And at this point, a lot of people are starting they're so when you put the trade on, you're of the opinion that obviously that it's going higher and you think for sure you're going to be right. But the moment it starts to trade below your entry and you're losing money, and it shows on your page when you're looking at your monitor and you can see that you're actually down, all of a sudden you change from confidence to fear. And now fear is starting to come in, and you're looking at this stop down here and you're saying to yourself, this is not doing what I thought it would do. I thought for sure it was just going to keep going straight up. And now I'm down. Do I really want to risk all the way down to my stop? And what ends up happening, or what used to happen to me, and what was happening to me before I talked to this gentleman 20 years ago, is that I would say, you know what, I'd rather take a small loss, and I would just go ahead and stop myself out right there, and I'd take a small loss. Now, the average person might look at this and say, hey, he's keeping his losses small. And he's keeping the risk down when he's wrong, and that is true, and that will allow you to live another day if you trade that way. The problem is you have to have a re-entry strategy. If you're going to get out here and it doesn't stop you out down here, like the trade, let's say you get out there, but then it turns around without going all the way down to here, you need a re-entry strategy, and if you're going to do that, that's fine. But what I end up seeing most people do is they stop themselves out and they go look for another stock. And then a week later, they'll look at this and they'll see it did exactly what they thought it was going to do, maybe even better. And this was happening to me over and over and over again for a pretty long time. And it was really frustrating. And then when I talked to this guy and he was talking about the Valley of Fear, I realized that what was a lot more important than my evaluation process of picking the right stocks, it was understanding that I have to look at each trade as a group. In other words, if I'm going to put a trade on like this, I have to look at it as a part of a 20 group segment. And it's not this specific trade that I'm putting on that matters. It's the next 20 that look like this. So if I put 20 trades on that look just like this, odds are pretty high that I'm going to make money over time. If I look at any individual stock and any individual trade, it's very possible that I'll put the trade on and it'll come stop me out and it's a loser. And if I look at the world this way, one at a time, then I'm going to trade with fear nonstop. It's always going to be trading with fear. And you're going to be thinking about losing money. And I think you have to kind of evaluate, okay, if I put this trade on and I'm looking at all this stuff in advance, I'm doing all my worrying before I put the trade on, then a stock can come down. And now for me, if a stock comes down and fiddles around like this, it doesn't bother me at all. I'm sticking with my stop. And I know that there's a pretty high probability that I'm going to see this moving up and either reaching this target or exceeding it and turning it into a winning trade. So fear of losing money, I do think, is something that you have to understand. If you're going to be successful, you got to make it to the other side of the valley. And this is a very, very difficult thing to get through. And I don't want to make light of it, because I think most people don't even understand that they're going through this process. And you have to put enough trades on with real money to see yourself through this valley. And if you can get through the valley, there's a very good chance that you're going to reach the next fear. And the next fear is one that's more commonly described out there, which is the fear of missing out. And this is where the average investor, I think, you've moved on from losing money. You're not thinking about that as much. You don't hesitate about putting trades on, or if you put a trade on, you're actually seeing the trade through. Now you're worried that you're going to miss out. And even if a stock doesn't meet your criteria, you don't have the patience to sit back and wait for a stock to meet all your criteria before putting it on. You see the market moving, you see stocks moving that you're not in, you talk to a friend and all of a sudden he's like, oh, I just made $3 or $4 grand. I had a huge trade. And you start thinking, God, everybody's making money but me. And if you start thinking that way, then this FOMO is going to kick in, and you're going to start putting trades on that don't meet your criteria, that are not a part of your plan. So now you go from having a fear of losing money to having a fear of actually missing out. And this is where patience comes in. If you don't have the patience to wait for your criteria, then you're going to start forcing trades, or you're going to start putting trades on that really just don't make sense. And you're going to have a very difficult time being successful that way too. So these two fears, they're counteracting. One is one that kind of prevents you from doing trades or prevents you from seeing a trade through. And then the other has you putting on trades that really don't qualify as good trades. You're putting on a trade that really doesn't meet the qualifications that you put in place in your trading plan. And if you have either one of these situations, either one of these fears as a dominating characteristic in your trading, you're not going to be successful. So, I wanted to spend a few minutes really just discussing this, because I think if you can get yourself through the fear of losing money, which I think is a very, very difficult trade. If you're short-term trading, it's a little bit more difficult, I think, than if you're doing a little bit longer-term trades. But if you're going to do longer-term trades, you have to risk a little bit more. And I know people that have a very tough time getting that first or one or two trades on a longer term time frame, and they get really impatient and they don't want to see it through, and they end up stopping themselves out prematurely. So it's, even if you're long term investing, it's very difficult to get through that losing money fear, but you have to do it. And if you can get through that one, then you have to work on your patience, and then you have to have a trading plan to be able to understand whether you're actually following your plan or not. And so the first thing you do is you get a trading plan together. That's kind of what I do when I'm working with individuals. Start with that. Make sure you understand what the characteristics are you're looking for. And then when you see it, you put that trade on, and then you follow the plan until you're either stopped out or you make money. And you go through 20 to 25 trades that way. This is the only way to know whether you are going to have any success or not. Once you've done that, then you know that you have a plan that's pretty decent. Now you have to have the patience to wait for it. So, I hope this makes sense. I'd love to get some comments from you guys. Any questions or thoughts that you have if you've been having any kind of problems like this. But anyway, this is my kind of my update for the week, and we'll see you next time.